One of the problems with recruiting for investment banking is not the knowledge or skills you acquire, but the access to talk with real investment bankers to put your best foot forward. Our sponsor, WSO Academy, can provide those connections with 60 head mentors who are finance professionals at top firms like Goldman, Centerview, and JP Morgan. Imagine being able to get on the phone within 24 hours with one of the Academy's 1,300 mentors right before a critical interview. Get on the waitlist for WSO Academy today by clicking the link in the show notes or by visiting wallstreetoasis.com/academy. All right. Welcome to the Investment Banking Insights podcast. My name is Alex Mason. I am your host, and this is the podcast dedicated to helping you understand and explore the technical and non-technical aspects of investment banking, especially if you're like me, coming from a non-finance background. So let's go ahead and get into today's question. This is the question related to financial statements. What are some major line items on financial statements? You may be asked this, especially after being asked what the financial statements are. So this is just that next level deeper beyond like, okay, can you regurgitate what the purpose of the income statement is, for example? So what are some major line items on financial statements? Well, I'm not going to go through an extensive review of all of them because we've covered a lot of them so far already, but just to give you a couple of examples. On the income statement, what are some major things? Well, of course, revenue. Revenue equals sales. That's the money that you're bringing in to the company. You have cost of goods sold. This is on the expense side, the amount of expenses related to the product or service that you're actually selling. You have something like operating income. Remember, there's different levels of income before you get to net income. Operating income includes things like depreciation and amortization, but it doesn't include interest expenses or taxes. So understand that. And then, of course, at the bottom of the income statement, you have your bottom line, your net income. After all the expenses are accounted for that period, what is the profit or loss of the corporation? That's what that is. Some major line items on the balance sheet. The most basic one, it's always at the top, it's your cash. How much cash does the company have? Remember, cash is the most liquid asset of all. You can use it to buy stuff. Pretty simple. You have things like accounts receivable or accounts payable. Accounts receivable, you're expecting to get some money, but you don't have it yet. So you can go ahead and count that as an asset. Accounts payable, you have to pay someone, but you haven't quite done it yet. So that's a liability. And then you have things like inventory, for example, which is your product that's ready to be sold, but you haven't sold it yet. So think about Apple, and you have some iPhones sitting there. They've already been made by the factory, and they're just waiting to be sold so they can be shipped somewhere. That's an example of inventory. And then on the cash flow statement, some line items, you'll see some connections start to emerge here. For example, net income. Remember, net income from the income statement flows into the top of the cash flow statement. So that's going to be there. And then you'll have depreciation and amortization, which we'll cover an example soon about how that plays into the cash flow statement. Capital expenditures, also known as PP&E. If you are buying equipment for your business, it's going to show up there in your cash flow statement. And then you also have your financing related aspects like dividends, debt related transactions, and then you have your ending cash balance. So those are an example of some line items there on the three financial statements. I would not talk about all of these, but I just wanted to give you a sampling here of things that you could talk about. So maybe you mentioned revenue and cost of goods sold. You mentioned accounts payable. You mentioned capital expenditures, just as an example. But remember, make sure when you're answering this question that it's structured, that it's clean and concise, but that also demonstrates a clear understanding of what these line items are. And so that's what I got for you today. Next time, we're going to be talking about a question of how do the three financial statements link together. So join me in the next episode for that discussion. This is Alex Mason, your host. This is Investment Banking Insights, and I'll see you next time.